Hello, you're watching World Talks on TVP World. My name is Sasha Farbach. The International Monetary Fund on Tuesday downgraded its global growth forecast, warning that the widening Middle East conflict is now a central threat to economic stability, with the Strait of Hormuz emerging as a key pressure point for global energy markets. Now, the fund says the world is already drifting toward weaker growth and higher inflation as uncertainty deepens across regions. We're now joined by Szymon Kardaś, Senior Policy Fellow, European Council on Foreign Relations. Thanks for joining us today.
Good morning. Thank you for having me.
So let's begin with this assessment. I mean, it's quite a negative one. How significant is this downgrade for the global economy? And what do you make of this warning that the world is drifting toward an adverse scenario?
Well, I mean, we are facing the projections that are linked to the huge energy crisis, which is, of course, linked to the conflict in the Middle East. And the first data that are actually a kind of a wrap-up of the consequences of the conflict for the energy markets. I mean, yesterday, the International Energy Agency published another monthly report, I mean, wrapping up the situation for as of early April this year. And I mean, considering the data they provided us with, I mean, with the cut of oil production at the level of more than 10 million barrels per day, which amounts to more or less 10% of the annual global demand, with the Strait of Hormuz basically closed, that affected around 13 million barrels a day of export of crude oil, but also oil products. I mean, it already has an impact, and it will have an impact in the months to come, as long as this conflict continues.
And at the moment, we're optimistic that apparently there's some negotiations up on the horizon, possibly. But if it doesn't conclude, what other kind of beyond the oil shocks? What else? Commodities, etc., supply chains are also now at risk because of this.
Well, I mean, this is, I mean, this particular conflict also affects, I mean, the trade in a global sense. I mean, we know that when it comes to export and the traffic that actually we could observe in the Strait of Hormuz, it was not only related to crude oil or LNG, but also, I mean, as we mentioned, oil products. It also is related to the import of food commodities that, for instance, I mean, some Middle Eastern countries are importing. I mean, those shortages when it comes to energy commodities, of course, affect prices worldwide, the costs of production, and well, I mean, those consequences would be of course, quite serious, as if we are still, I mean, dealing with this conflict situation on the ground.
Let's also narrow it down. I mean, one of the things, I mean, the growth downgraded, adverse effects coming, that sounds all bad. But if we're looking at some of the numbers, specifically Poland, still performing quite well. That was downgraded, but it's still above, hovering, I think, around 3.3% above that global downgrade. So tell us how much Poland is affected by this and how strong, or let's say vulnerable, it is in this whole IMF ranking.
Well, I mean, fortunately, Poland is not so much, I mean, directly affected by the war, at least so far, because in terms of, for instance, natural gas supplies, I mean, the Qatar is of course one of the players, one of the important partners. But last year its share in the total natural gas import in Poland was around 11%. We are to a larger extent dependent on oil supplies from Saudi Arabia that actually replaced the Russian Federation when it comes to the key crude oil supplier. And at least for now, we have not faced disruption in some disruptions in this respect, but we know that Saudi Arabia is also affected by the conflict. So we can expect that maybe some disruptions might occur later on, and of course, the problem that Poland is facing, together with other European countries, and the fact that this particular conflict might have significant economic consequences for the whole Europe, is that we as a continent are to a large extent dependent on fossil fuels import. When it comes to crude oil, it's according to International Energy Agency, the level of 90%. When it comes to natural gas, is 85%. It's also high when it comes to oil products. So actually we being an energy dependent continent, and in the first place dependent on fossil fuels, we will be affected either by direct disruptions or indirectly by the fact that there is less energy commodities accessible worldwide, and the growing competition over access to energy resources between continents that are energy dependent will have an impact on us. So maybe so far it's not so visible because
Right.
we were not directly. We as Poland, we as Europe were not so much directly, dependent on Middle East. But if those shortages, remain in place, in next several months, there will be a growing competition over access to resources that will have a tremendous impact. And actually, in one of your materials, you mentioned the jet fuel, right? It is probably one of the things that might affect us in a more broader, economic sense very soon.
Yeah, and also, the IMF has warned that a lot of this fragmentation is contributing to the problem. I just want to get your sense. Also, we have the G20 finance ministers meeting and central bank governors. That'll be on Thursday. Of course, Finance Minister Domański is traveling to the United States for that. It's because I think G20 is important for Poland. But what do you make of, let's say, what can those finance ministers and the bank governors realistically do at that meeting? What tools are available? How significant is G20 in all this?
Of course, some kind of short-term measures might be discussed or considered. But the key variable, when it comes to the stability of the energy markets, and therefore the stability of global economy, is linked to the conflict in the Middle East. So any other measure might be a kind of a temporary measure, and if we do not erase, the key reason why we in certain regions, but also globally, we are trying to we are already experiencing the consequences of the war. If the war is still there, any measure that could be applied is only of a temporary effect. So it's important that they are discussing, but actually, the key problem remains, and as long as the conflict continues, we will be able only to apply some temporary measures, not actually solving the problems that are ahead of us.
One final quick point, just on all of the assessments of the IMF has also put the UK as the hardest hit out of industrial economies, really a tough rating there. Do you think in any mind that will, because of dependency and the shocks, will that in any way make them drift closer to the European Union again? Was that too soon to tell?
Well, it's difficult to predict, actually, because on the one hand, we already observe some signs of interest in terms of relaunching the tight cooperation between the UK and the European Union in various areas. But on the other hand, of course, we know that the political dynamics in the UK actually drives into a direction where actually anti-European forces are gaining more and more support. So I mean, it's really difficult to predict, because I mean, it seems like the current government is clearly interested in boosting cooperation with the EU, but I mean, the political situation on the ground is quite difficult. So I mean, when after next general elections, I mean, we might have a completely different different direction in this respect.
All right, so giving us the latest there from that IMF outlook downgrade. Thank you so much for that, Szymon Kardaś from the European Council on Foreign Relations.
Thank you so much.
Thank you for watching. That concludes World Talks, but stay right here on TVP World for more news and commentary. Goodbye.